Steve Sosnick here with today's Interactive Brokers Midday Market Update for Tuesday, May 26th. Sorry, I had to look at my watch there. I forgot what date it was. Well, it's rally time again. And I think I want to reiterate the theme that I started to express last week about the difference between stops and options and why stops are really not particularly helpful in the market environment we're seeing. We had a 3-day weekend here in the U.S. and as well in the U.K. and some other countries as well. But I'm going to focus on the U.S. But the rationale applies no matter where you are. I checked the futures yesterday morning. It's reflexive when I wake up, and they were about 1% higher. And then when I checked them this morning when I woke up, they were about 2% higher. The rationale was, okay, we're reopening the economy. There's really not much new news content there. As a matter of fact, I would say with the amount of reopening we've seen, we've actually increased the risk of a secondary set of infections, but I am not speaking as an epidemiologist. I'm not even going to pretend to be one of these amateur epidemiologists who've cropped up over the last few weeks and months, because it's just not my thing. But I look at what happened in a place like Ocean City, Maryland, where one of my best friends from college is a doctor, and seeing his concern about all the people walking around closely with no masks, and what that's going to mean to his community. And so I take my cues from something like that. So that being the case, markets are entitled to their enthusiasm. It's definitely what we call the risk-on type of day, although I hate the risk-on, risk-off terminology. But people are buying, for the most part, risk assets. They're buying oil. The recovery trade seems to be in full bloom, much like the rhododendrons I'm seeing outside, but not really at this point, the market's going to do what the market's going to do. And so if you were the person who left yourself exposed on the short side on Friday before a 3-day weekend, okay, that's trading. You can do such a thing. I imagine most people have been trading from the long side who watch this, but the same will apply if we start to head lower. If you'd relied on stops, guess what? You'd have been taken out at the highs today. And I think the fact that the market opened so strongly that we pretty much saw the highs at the open tells you that I think a lot of people had buy stops one way or the other, whether it was to get long if we crossed through the 200-day moving average or the 3,000 level on S&P, or short covering. Regardless, if that's what you were relying on, you got the worst execution of the day so far. Things can change later in the day, but we're seeing that same pattern where we move extraordinarily overnight and really not doing much intraday. As a matter of fact, as I'm taping this, it's about 11:40 New York time, and we're actually sort of nearing our lows for the session, which are still sharply higher, still a good 1.5% up on most indices. But as we went into the European close, we saw some profit taking. We saw some profit taking around 10:30, just because we always do. Markets seem to have sort of a buying or selling climax right around that time, 1 hour after the open. I suspect there's just some programs that have that 1 hour time period. And then we closed in Europe about 10 minutes ago, and we sort of drifted a little there. Wouldn't surprise me to see some profit taking. But here's the problem: if you relied on the stops, you got the worst trade of the day. If you used options prudently, you got that protection. Again, there are costs to doing both. Stops don't cost you anything additional to do the trade. Options definitely bear a cost. But consider these kind of things when you're seeing the markets moving overnight, and unless you're actively trading overnight, which I advocate because it's not right for everybody. Conditions are thin. Markets can be moved around. I'm not going to use a different M word, but markets can be moved around more easily because conditions are thin. But then that opening print is taken as the gospel at 9:30 the next morning when U.S. markets open. So if you want to be participating in the overnight moves, options are your way to do it, or just an outright long or short, but don't rely on the stop to cover you. So where do we go from here? I actually do still expect to see us churning a bit. it seems unbelievable to me that we would just sort of cross through both a major round number and a 200-day moving average with just a simple overnight move on light volume, on relatively light volume and overnight futures trading. But stranger things have happened. What we're seeing now is the market really having a propensity to move, and those moves tend to happen outside normal hours. You really need to adjust your risks and your trading strategies accordingly. Have a good one. We'll talk tomorrow. Take care. Bye-bye.